You can let everybody in, actually. Yeah, it's fine because it's early, and if we don't, they might go away. Hi, everyone. As we're getting everyone into the room here, we're just gonna hang tight. We'll be starting just probably a minute or two after 6:30 to give everyone a chance to log on and get themselves settled. So glad you're here, and we'll talk to you in just a few minutes. Right. There we go. Just getting some technical things sorted. Hi, everybody. Good evening. How are you doing? It's so great to see such a wonderful turnout. My name is Jennifer Landon, and I am the broker of Landon Realty Group. And I want to welcome you on behalf of the team, many of which are here and which you probably were most likely invited by them. And you will have a chance to connect with them at the end of our presentation today, which will be brief. We're going to go over some main points. We're going to give everyone just a few minutes in case they're still trying to log in or get something settled. So if you can just hang tight with us for just a wee bit more, we will get you started and on the way. Just a couple of housekeeping things. If you have questions during the presentation, you can use the chat box. And we will try to answer as we go, but there will be a Q&A session at the end of the entire presentation where you will get to meet in a smaller group and ask specific questions. We will also have a loan officer on that will go over just a few points in regards to lending. If you have questions for him at the end of his section, you can either put them in the chat or you can just raise your hand and ask him directly. We want to make sure that you get all of your questions answered up front. The home buying process is quite robust. There's a lot of arms and legs to it. So I think the fact that you are here and learning about it will just make you a more confident buyer when you are at that time to buy. So I'm just going to give it 2 more minutes here and then we will get started. So I just wanted to give you our agenda. Okay, let's get started. If anybody joins late, we'll just have them join in. But once again, feel free to use the chat. We will do our best to monitor it as we get going here. And we are off. So my name is Jennifer Landon. I am the broker of Landon Realty Group. And like I had said earlier, we have a lot of team members on here. So you are most likely invited by one of our team members. And please use the chat if you have any questions. Otherwise, if you would, if you wouldn't mind just muting, just so we don't have any crosstalk.
I guess.
Perfect. All right. So today's topic is how to win without overpaying, a buyer's smart strategy for competitive markets. Once again, I'm Jennifer Landon, Landon Realty Group. We are a Los Angeles-based real estate company, and with over 25 years of experience and over 750 homes sold. We've seen a lot of scenarios, and the whole point of this program today is to bring you some of those experiences so you can learn from them. So a few things of what you'll learn today is number one, understanding today's market, what sellers actually want, how to structure a winning offer, and financing your future. We will be touching on financing as well. So let's get started. So today's market, the reality is multiple offers still exist. It's interesting because you can go to the next slide, Mia. It's interesting because the desirable homes attract the most competition. I don't think anybody would be surprised by that. Oops. There we go. Highest price doesn't always win. In price, it's always terms and price. Clean terms often beat higher numbers. We're going to talk about that and what the word terms actually mean. And strategy matters more than emotion, finding out what matters most to the sellers. This is what we're going to talk about when you're structuring an offer and how to win in a competitive environment. Let's start with what sellers want. So the most important thing to a seller is that they want to know that whoever they go under contract with, that they are going to close. The worst thing for them is to get halfway through a transaction and have it to fall out. So some of the things that you can do to help that is strong verified financing. That's why we have our lender on today. Meaning if you can come in being pre-approved and reduce that time contingency on your loan, or even get rid of it completely by waiving it, that will give a lot of certainty to a seller in a competitive situation. They will always lean towards the buyer that can do that. Also, shorter timelines, meaning that when you're doing your investigation contingencies, if you can work through them more quickly, they will be more compelled to select your offer. And fewer surprises. And that really comes from understanding if doing your homework ahead of time so you are more clear on if this is the house for you. I know that can get tricky, but that's why you need a good agent with you to help guide you and to direct you. Let's talk about the winning formula for that. Here we go, full lender approval. You know, full lender approval for me as a listing agent is the same as cash in a lot of ways. Meaning, if you're telling them, I've already done the homework, my loan is approved, I just need to identify the house, then it is going to be a huge sigh of relief for that seller, and they will definitely lean towards you over somebody who does not have it. So that is a little homework up front that a buyer can do. Having your proof of funds ready, no matter what the size of your down payment, or you will still need to show the seller that you have whatever funds you're going to be using liquid and ready. So if that's something that you would have to move around, having that ready to go, current, up to date with your name on it, is also going to give them a lot of confidence in you. Clear budget and comfort range. This is where you really work with your lender to understand what payment and budget you can work in. And then in conjunction with your agent will help guide you into the right properties. And of course, hiring the best team possible, because real estate is a team sport. I always say you need an excellent realtor, an excellent lender, and then you're the third piece of the puzzle. You're a team through the entire process. So pro tip, what to offer. So you found a house and you want to know what should you offer. This is a number one question that we get a lot. And here's how the process that we usually go through with our buyers. We always look, of course, at the comparable sales. We want to understand the market and we want to know how the property falls into that. For example, are there model matches? And how many days on market a similar property was marketed? Did it sell for over? Sometimes the market is behind the actual values. I can tell you, as a real estate appraiser, the appraisal is looking backwards anywhere from 30 to 60 days. And so having the understanding of what just went pending can actually give you a better perspective of where the market's at. And when you work with a really good agent, they will help get you that information so you can have understanding of it. Condition and upgrades evaluated. Knowing the cost of doing the repairs and upgrades yourself can help you determine even the return on investment on that value. Adding on to a house can sometimes cost more than just buying a house with bigger square footage. So the most important thing you can do is to sit down and to do a compare and contrast with your realtor to understand what the upgrades are really getting you and what the true value of those are. Market momentum, this is what I was talking about before. It could be that certain pockets or areas are accelerating faster than others. And so understanding that maybe those areas are going multiple offers or for a certain type of house, there is a huge demand. So understanding that and working with your realtor can help you determine. And then emotion removed from the pricing. Know your walk away number. Sometimes when we get into these competitive environments or bidding wars, it can make us respond in a way that maybe is pushing us beyond what we really should be. And that's where your realtor will help keep it in check. You understand, where you should be financially. One of the questions I always ask when we get into one of these situations is I look at the market and I determine, if we do not get this house, will there be another one that we can get that would be just as good? And in some cases, especially in Los Angeles with so many custom homes, the answer is actually some of them are one of a kind, but they're not necessarily all one of a kind. So understanding what market you are buying in and knowing that if you didn't get this one, there'll be another one, just like it, is a huge part of that. Okay, here's one of the most important things that you can consider that will not raise your price. It's terms that matter. Terms are the different conditions of sale and structure of the offer that are beyond price. It is the length of escrow. It is the days for contingencies, which are investigation, appraisal and loan, insurance. It's all of these things that give a buyer an out that create so much discomfort for the seller. So if we can modify and structure those in a way that are more appealing to the seller, that still offer protection to the buyer, sometimes you don't have to go up in price. Timing and terms create leverage. Be prepared to move quickly. It does mean you have to be prepared to get the inspections done. A lot of times I've had buyers that actually went on vacation right after opening escrow, and it was up to me to make sure the inspections got done. And so there is ways to do it even if you are busy. Optimally, it'd be best if you were there, but there are ways to do it and work within the timeframes. Being flexible. Sometimes the seller needs more time in the house. Maybe they need a rent back. Maybe they need a longer escrow. And if you can accommodate them, then that can go a long ways in your transaction. That's where understanding the motivation of the seller before you write the offer is really the key. What do they need and what do they want? And are we able to give it to them without upping our price? Smart strategy beats overbidding. And the smart strategy, again, is going back to what I just said. What does the seller want? And can we fix any problem they're having that is not just price related? And then complete the research on the property in advance. I'm pushing a lot of my buyers when there is time to do so to check with their insurance company to understand what the cost of insurance would be up front. It can change vastly between properties and impact payment, especially if you're in a very high fire zone. If they are available from the listing agent, review the reports, review the disclosures. This actually gives you, as the buyer, confidence on what condition the property is in. So if you decided to be competitive and wanted to up your price, you're not wondering, am I going to have to come back later and ask for credits because the property's condition may not be what you expected it. So sometimes we have a lot of time to do this, and sometimes it has to be fast. And that's why your agent will be crucial in this part of it. Not only that, they know where to get the disclosures, they know how to read the reports, and they know it should be given. So definitely lean on them for that. And here's how we protect you, the buyer, from overpaying. We set a walkaway number. We know what number we don't want it anymore. You need to know that up front. And I've had some people set a walkaway number and then actually tell me later that they wish they had gone higher. So you're the only one that can set that. So understand what that is before you go in. Avoid emotional bidding wars when possible. Sometimes it isn't possible because bidding wars do occur, but definitely try to keep everything in check and understand the property that you might be bidding on. Is it one that you can find another one similar, or is it one of a kind? Appraisal risk is evaluated up front, meaning taking a good look at the comps and understanding if you're within a range of appraisal or not, because most people do need to secure an appraisal amount to get their loan. So that helps you set that cap on where the value is. All right. Financing your future. I am now, let me go through these quickly. I think did we go to the wrong slide? Where are we? I think we are, yes, somehow it got a little skipped. Technology. I think we are at the next one. Okay. Appraisal and inspection strategy. Set realistic appraisal expectations by just reviewing the comps with your agent. And for property inspections, I always recommend that you focus on material and structural issues. We do not want to concentrate on cosmetic things that we saw during the walkthrough. You want to focus on the bigger ticket items. Credits versus repair strategy. This is something that you can discuss with your lender. Sometimes a rate buy down can help you in your payment. So when you're negotiating credits and repairs, if you do have a sizable credit that you're going to be negotiating, it's always best to consult with the loan officer to see how that credit can best be applied. Sometimes that can be done in a buy down, which meaning you're reducing the interest rate, which can lower your payment month over month, and in the end possibly save you more money than the actual credit amount would have on a standalone basis. So there's all kinds of ways to be creative on that. So if the buyer payment is sensitive, the debt to income ratio is tight. If the buyer's main issue is qualifying for a loan, not the purchase price, a lower interest rate can reduce the monthly payment far more than a modest price drop. This is an example of what I was just talking about. We can go to the next slide because we're going to have our lender on here to go over that. Realistic appraisal expectations, inspection, focus on material issues, credits versus repairs, and keeping leverage while protecting you. And communication always is the winner in transactions. Agent to agent strategy, building relationships. One of the things that your agent is going to do is sell you to that listing agent the moment they get to have a conversation. One of the things I love to hear about when I'm a listing agent is tell me about your buyer. What are they looking for? It really does matter to sellers who buys their home more than you think. Understanding again the seller's priorities so you can draw up an offer that supports them as much as possible. Positioning you as the easy yes, meaning that you have offer so much in terms that you seem like you are the best buyer for their house. And maintaining professionalism and trust, always excellent communication between your agent and their agent is super necessary. When to walk away. Price exceeds the true market value. Unacceptable risk exposure. Maybe they're asking you to waive every contingency, which just is not acceptable. Seller terms don't align. Maybe timing is off. And another opportunity is coming. So, and if we don't win the first one, we sit down, we look at the market, we redefine it, we understand what the goal is, and if we're placed appropriately within it. Readjust strategy. Maybe if you weren't pre-approved, now you get pre-approved. And for better positioning on the next go around. And don't worry, there is a home for everyone out there. So we don't want to have any regrets in the process. All right. And now I am going to bring on and introduce our lender presenter. Ophir, are you on?
Yes, I'm here. Can you guys hear me?
I can hear you. So
Awesome.
I'm going to mute myself and we're going to go through a few slides because now that they kind of understand this,
Yeah,
the strategy of getting pre-approved is really important. I know you're going to touch a little bit on loan programs, and I know we do have some questions specifically.
sure.
So if you could just hang tight after you do your slides, we'll ask them. Okay.
You got it. Sounds good. Hi, everybody. I'm Ophir with Option One Lending. Thank you, Jen and the team, for having me today on the presentation. I'm a mortgage broker here in Los Angeles. My office is in Sherman Oaks. And my goal today, is to essentially kind of give you guys an overview of some loan products and the process. It's to really help you guys more understand, you know, where where to even begin and what to look for and how to prepare so that when you guys do find the right home, you're actually ready to make an offer and get that offer accepted, essentially. So,
Mm-hmm.
that's pretty much kind of, I would say, just an overview of myself. But yeah, as we progress through the next slides, I'll give you guys kind of more detail on some products that we have and then what we look for actually as a lender. So, what do you actually qualify for? The biggest mistake that I see most home buyers make is relying on online mortgage calculators. Those calculators 90% of the time, they actually, I mean, almost 100% of the time, they don't know, of course, your full financial picture. They're kind of guesstimating. So every buyer does qualify differently, right? We do look at three main things essentially, which would be first your credit. So how is your credit profile? How is that structured? Do you guys have a lot of, student loans, car payments, credit cards? How's your overall score? How strong is that? Second, we do look at your income. So are you, W-2 employee? Are you self-employed? How is your income pay structure? And then third would be assets. So how much do you have available for a down payment? Jen, do you mind going into the next slide? Perfect. Thank you. Okay. Yeah, so this was exactly kind of what I just went over briefly. But third would be your assets. So how much do you have available for a down payment and closing costs? We'll take a look at, to see, and there are options, there are ways that you guys can actually qualify for certain properties with maybe not having the full down payment. There A lot of the loan products out there allow for gift funds. So if you had like a family member or a friend, a relative, anybody that'd be willing to lend you guys maybe some money for the down payment so we can hit that goal, um, that is an option. Now, going into types of loans. So, the good news is that there isn't just one type of mortgage out there. We do have conventional loans, we have FHA loans, VA for veterans, which some of you may have already heard from those products. And then we do have specialty programs for self employed borrowers using, for example, bank statements instead of tax returns in order to qualify you. And then there are down payment assistance programs that are available for those who qualify. The biggest takeaway from this is don't assume you don't qualify. There are far more options available today than most people really realize out there. And so
Mhm.
just by having, a pre-qualification with a lender, if it's me or somebody else, you guys can always, reach out, and pretty much it could even take up to 5 minutes to really know more so or less what may or may not be available to you.
Mhm.
So I like to always say never. Now, going into the next slide, which is also kind of just a gist of some products that are out there. You do have 0% down payment options. Um, a lot of these programs, they do require you to qualify within certain median household income, things like that. But you guys can always reach out and we can look into that for you. Going into the next slide. So, anatomy of a mortgage. So, understanding the payment and process, which is, of course, very, very important. When you're buying a home, don't only focus on the mortgage payment. Your monthly payment does include principal, interest, property tax, homeowners insurance, and then sometimes even mortgage insurance. Or, for example, if you're to purchase a condo or a townhome, you do have a homeowners association fee. So these are all very, very important things to keep in mind because you do have the option sometimes to either include the tax and insurance in your payment or you can pay it separate. However, that is still kind of a liability that you are responsible for. So it's always good to kind of look at that all in payment. And then once you are pre approved, the process is actually pretty straightforward. We collect your income documents, your assets, and then your identification up front. So there are no surprises once you're under contract. And then we fully underwrite the loan in house, which means when we do a pre approval for you guys are 100%, good to go. We can feel confident with writing an offer. Should there not be any delays in the process, the listing agent can always reach out to us and we'll always assure them on your behalf as well. Um, my biggest piece of advice is to talk to a lender, of course, always before you start shopping for a home. It will always give you more confidency in the process. A pre-approval costs nothing at the end of the day. There's no obligation. It gives you confidence, a clear budget, and makes your offer much stronger when you find the right home. If anyone has any questions after today's seminar or just wants to know what they would even qualify for, I'm more than happy to help. And yes, thank you, Jen. I'll hang around just to answer a few more questions. And yeah,
Mhm.
awesome.
Yes. Well, there's lending, like the real estate side is very robust. And I guess the one thing that I want everyone to understand is there are so many programs that in order to go through each one of them in one sitting just wouldn't be possible. So I guess just having the understanding that having the conversation and having that expert understand what your personal situation is and say, okay, based on your profile, these would be the best programs for you is the best thing to do. Maya, I know you had some specific questions. Do you want to just read them off and we can have him answer?
Yeah, so a few of my clients have been kind of curious about first-time buyer programs here in 2026, or any kind of incentives. I know, obviously FHA is a great way to go for first-time home buyers. You can get as little, as little as 3.5% down. But I have heard some things about um, grants for that down payment as well. If you could just say a little something about that.
Yeah, absolutely. I mean, look, every buyer situation is, of course, going to be different. Um, so I don't believe, that there's only one specific type of loan out there for every buyer. Really depending, of course, on how they do qualify. There are some down payment assistance programs out there. Maybe some of you are familiar with the California Dream for All. Or there are, some local city and county grants. It is, of course, subject to kind of how that client's financials does look at the end of the day. Like I said, they would need to fall usually within like a certain median household income. They need to have worked in a certain line of work for X amount of years. For example, for FHA, we do need 2 years of consistent W-2 income. Um, and so I would always say with a lot of the, grants or, down payment assistance programs, that it really is case by case in terms of getting approved for it and then qualifying for it. But of course, like if you are familiar with the California Dream for All program, um, especially if saving for a down payment is the biggest obstacle, the only trade-off is that the state shares in a portion of your home's appreciation when you sell or refinance. So I don't always and automatically recommend this type of loan, but it is available, and we always like to compare it with all of our options, because we want to make sure that you guys are getting the best products out there, but also um, the long-term goals are met as well for the client.
Can I just expand on that with you?
Yeah.
It's my understanding that like the Dream for All program, it's a lottery, and you have to be, and then once the money's gone, it's gone. And usually what I've understood it to be, like once they release it, within 24, 48 hours, the grants were gone.
Hmm.
So it's not like it's just available all the time. You almost have to be poised and positioned when it is released and hope that you're picked. I agree with you that unless there is no other option, I'm not super excited about it because it's they do own a portion of your house. You do owe that. The grant isn't free money. It's basically a bridge that when you do sell, you do have to pay it back. So
Exactly.
so
Exactly.
it seems great on paper, and for if some people, if that's the only way they get in, I think it is amazing. But if you have other means, I'd almost rather see you do 3% down and do
Yeah.
that.
And we do have, like, I'll just chime in real quick. We do have an FHA product with 0% down. So technically, you can actually purchase you could take a loan up to 1,250,000 without coming in with any closing costs or a down payment. And I even think that that's a better product than the Dream for All, because, like Jen had mentioned, you're not going on title with the state essentially. You don't owe, the appreciation of the home when you do sell or refinance. So those are just some conversations, of course, to just be had with your lender. And you guys can, of course, check with me anytime. I see that Nancy actually had asked a question, if I could
Mhm.
talk about credit. What are we seeing for minimum credit scores in order to qualify? So for FHA, the minimum credit score that they want to see is going to be 580. And then for conventional loans, the minimum is going to be 620. The debt to income ratio for FHA is 55%. And then for conventional, you're looking more at around 50% is going to be our max, 49 to 50%.
Can you explain what debt to income ratio is for our friends that maybe are not familiar with that term?
Yeah, absolutely. So debt to income ratio is essentially the qualifying expense ratio that the banks look at in order to qualify you for a mortgage. So what that means is we will collect and gather all of your monthly liabilities. So everything that is reported on your credit, such as student loans, car payments, credit cards, anything like of that nature. And then we would divide it by, if you are, let's just say, a W-2 employee, by your gross income. And that's what's giving us our qualifying ratio to get pre-approved and to get a mortgage.
Interesting.
Can I ask
Interesting.
another question to follow up that? Hi, Ophir. Hi,
Hi,
everyone.
Nancy.
I'm Nancy. For a lot of my buyers too, I always get because we're having a lot of multi-generational buyers, right? Like
Mhm,
right now, I'm seeing a lot of families buying together, a growing family bringing in the
mhm.
in-laws. And so they'll buy a house with an ADU and they're like, we're both going to qualify and blah, blah, blah. And my dad has a lot of money. But it's my understanding with credit that usually you guys go based on the lowest credit score, right? So daughter can have an 800 credit score, but if dad has a 580 or a 600, you guys go based on that 600. Is that true? Can you expand a
Exactly.
little on
That is
that?
true. That is true. So it doesn't always necessarily work towards you. It could sometimes actually affect negatively your pre-approval, because what we take a look at is if there are two borrowers on the loan, we're essentially going to be using the lower score out of the two. So it is important that when you are looking, if you do need a cosigner, whether it's for income, whether it's for credit, whether it's for a down payment, it's important that from all aspects, from a financial standpoint, that whoever we do plan to bring on to the loan is overall a strong profile borrower, because that could affect us sometimes negatively.
Mm, yeah, good question. You have a question here out there. Can you talk about if any debts are excused or looked at differently, such as student loans?
Yes. So certain student loans are on deferment payments. So pretty much, a lot of I would want to say that a lot of clients, they do have different like payment plans with their student loans. So we could use, certain documentation to offset the student loans and not have to hit, the clients essentially with that full payment. I know these student loans can range, from a couple $1,000s to hundreds of thousands. So that can definitely get pretty hefty. And so we can definitely, yeah, we can always look into it. We can see what we can do. And we can see, if there's any way for us to exclude the student loans so that the borrowers, it doesn't affect their qualifying and purchasing power.
Perfect. And then one more question. How do leased cars versus financed purchased cars impact? Is there a
Um,
difference?
So no, actually, it would pretty much be the same. The one pro to having a car financed is that if you are self-employed or you have a business, and you do make your payments for the car by the business, if you have 12 months of payments of it being paid by the business, we can actually exclude that as a liability. So we wouldn't have to hit
Mhm.
you with that monthly payment. But lease cars and finance cars, if there is a monthly payment on there and it is paid on your personal finances, then we do need to still hit you with that payment.
Okay. This has been really informative. Any other questions, Maya? Was that the main one you had?
Yep, that was it. Thank you so much, Ophir.
Of course. Yeah, absolutely. I think Maya also did have a pretty good question. If now is a good time to buy or to wait. And I think that's the $1 million question that everybody always has. And I'd like to just say that, at the end of the day, nobody can, of course, predict where the interest rates or home prices will be in 6 months, in 12 months, in 2 years. But if you are ready financially, I always like to say, and if you do find the right home, buying now will always make sense, especially where we live, being in the Los Angeles market. And keep in mind that there is always opportunities to refinance your mortgage. And if home prices will always continue to rise while you're waiting, you can always end up paying more for the same property. So the right time is to buy when you're financially ready, not when you're trying to perfectly time the market.
I love that. And I want to just piggyback on, the best time to buy was 10 years ago. So you might as well just buy now. Right. And I just bought a house myself, and I sell real estate, and I'm not worried about it because it was the right timing for me. So just keep that in mind. Two quick questions that came up. First of all, are 50-year loans a real thing? I've heard that kicked around the news, but I haven't seen them actually go into play.
Yeah, so
Have
we
you?
actually, yeah, we haven't seen those either. We're seeing some 40-year options. The 50 years, the banks haven't just yet, I think, haven't taken them in yet. So um, I think that it could be something in the upcoming months, potentially up to a year, but I haven't seen that just yet.
Okay. And then to answer Justin's question about a timeline from going under contract, talking to a lender, I would say at the minimum, it would probably be from start to end between deciding to be a buyer, getting qualified. It's how fast you move. But I would say between getting qualified, looking for a house, going under contract, and closing, the fastest would probably be 60 days. And you might be able to do it faster if you really identified a home because, once you get qualified, the trickiest part, and you would think, because I was just looking at the MLS before we went on, we had almost 1,600 new listings that hit the market today. Just to put that in context, usually it's between 400 and 600. So we're having an influx surge right now because it is the quote unquote summer season. But even then, the home that you want, it may take a little longer to identify. And then if it goes multiple offer, you may or may not be able to capture it on that first round. So you want to leave enough cushion. And what I would say to you, Justin, is when do you need to move by? What date do you want to be in that home? And then work backwards from there. And it really isn't too soon to start looking. Unless you're tied into a lease that you can't get out of for 2 years, then maybe it's a little bit early to get pre-qualified. But to start looking, going to open houses and educating yourself on the market, what that's going to do is when you do see the home, you're going to already understand the value and feel much more confident in making an offer. So the more educated, like doing this today, congratulations, you're like light years ahead of most buyers that have no idea. You're already empowering yourself. So that's great. All right, Ofer, thank you so much. We're going to keep going on our
Of
slides. We
course.
only have
Thank
a
you,
few
everybody.
more. And then we're going to do our breakout. We're going to do some one-on-ones at the end. So just hang with me for a few more minutes before we do that. Let's see our next slide. Your next steps. What happens now? You have this information. So the next step you should do, if I was in your shoes, would be to sit down and have a personal buyer strategy session with your realtor. This will identify your goals. They'll help direct you to a loan officer that can best serve you, and to go from there. So everyone's individual, so it's really important to take the time to figure out your specific situation. And then doing a financing and strategy review. It might be that you sit down with the loan officer and they said, you look great. However, you need to pay down these 2 credit cards, and that might take a few months. So understanding how to best position yourself financially is so important. Then a playbook customized for you. Now that you have everything in play, how are we going to go about getting you your house? And then again, win smart, not emotional, because when you have a plan, you win. All right, so we are now going to jump to some individual Q&A time. If you were invited here by someone, we're going to go ahead and put you in a breakout room with them so you can ask any individual questions. After that, we will be closing up. We're going to send you our FAQs, our most important ones. We're going to email them to you. And by all means, thank you for being on here today. And thank you to the team that is on here. And we hope we can educate you and get you into your next home. So let's jump into those breakout rooms.